Joining us right now is E.J. Antoni, Heritage Foundation economist, Unleash Prosperity Hotline, and David Malpass, former head of the World Bank. So, the fellas, let's just have some fun here and freelance. E.J., look at the stock market's having a lousy week, yesterday and today in particular. And I have to believe, I know there are many factors in the stock market, and I don't pretend to be a short-term stock market player, but I have to believe, E.J., the fact that tax cuts are so far on the back burner with this crazy, dumb Senate budget resolution, which is nothing more than a spending bill, as Rand Paul put it on this show last night from the floor of the Senate, all right? No tax cuts. Stocks don't like it one bit. That's my hunch. There's other stuff we can talk about, gentlemen, but I want to start there, EJ. What do you think about this?
Larry, I think you make a great point. And if we think back to the first Trump administration, when it looked like they weren't going to be able to get the first tax package done, we saw the exact same thing that December, where markets were swooning, thinking, oh, no, we're not going to actually get the relief that we need. And then once it actually got across the finish line, all of those losses were reversed and turned back into gains. So I'm hoping that's what happens here, that we do actually get this package across the finish line, because if we don't, you're going to end up seeing the equivalent of about a $4 trillion tax hike almost exclusively on the American middle class. I mean, that's devastating. You look back over the last 4 years and you see inflation has already robbed about $4 trillion from the American middle class. This will just be more of the same. And
you know, David Malpass, the risks here are very significant because you've got slumping consumer sentiment. These Michigan sentiment numbers are very bad. January and February across the board, they're showing less confidence in the economy, and they're showing much higher inflation expectations. Actual inflation, as you know, has come in higher than expected, than anybody wants. Last 3 months, CPI over 4% at an annual rate. We're slumping retail sales. Walmart is getting a little more pessimistic about their own sales. It's one of the greatest consumer companies in history. I mean, you're sort of seeing the economic signals are all of a sudden much slower growth, higher inflation, a potential stock market swoon. And I don't want to blame it all on tax cuts, but I just think, you know, let's go sit back to go with EJ's thoughts. What did tax cuts do, 7 years ago when they were first put into place? They increased corporate profits. They increased worker wages. They increased productivity. They lowered consumer prices, and they increased stock market returns. You don't want to reverse that, do you? And I think the stock market right now, although it's short term, I think the stock market is worrying. It is fretting about a reversal of all those good things.
Hi, Larry. Yeah, follow the money. And so if you think about it, taxes are forever. If if the rate doesn't get changed, if the Senate's not able to find a mechanism to actually get the reconciliation bill done, the scoring done, then that means it makes it very hard for earnings numbers to come through. So I think that's all that's happening. Now, you know well, and I do, the complexity of getting one of these bills done. Each time there are very few of these big tax bills, and it's got to be done right, and the communication is really important. So that's the one thing I'll leave you with. I think people should be talking about the positive side of, if this gets done, it's really good for the economy for the long term.
Yes, of course, and I'm an eternal optimist, and so are you, and so is EJ. But the reality is, right now, it looks very shaky. Here's our friend Senator Rand Paul last night on this show. Take a listen to what he said.
The amendment that I will put forward will be, let's put the House spending cuts into our budget, $1.5 trillion, and show that we're serious so people like me can be more enthused about the project. Right now, I think it's just a spending bill, which I think is a waste of an election, and it goes against what President Trump is saying and against what Elon and Doge are doing.
You know, EJ, you listen to Rand Paul, who's a very smart guy, libertarian, conservative, and so forth. What he's saying is this Senate budget resolution, it ignored the Doge dividend, it ignored the Doge spending cuts, and it ignored the Trump tax cuts. So what the heck good is it? That's what I'm saying. And after all, investors have to worry about, they can't necessarily conclude everything's going to be okay. I hope everything's going to be okay. I hope the House budget resolution gets done next week, because that'll have one big, beautiful bill with the tax cuts and the Doge dividend and so forth. But who can tell? That's the future, EJ. And you heard Rand Paul, and I don't understand these Republicans in the Senate. I do not understand them.
Larry, it's a great point. And you have to wonder, are these Republicans actually that conservative or libertarian, let's say, in the case of Senator Paul? But whatever the case may be, you make a lot of really great points. They need to get the spending down. They need to get the income tax rates down. They need to incorporate all of the great gains that have already been made at the Department of Government Efficiency with Elon Musk and his whole crew. And we should also be talking about incorporating the additional revenue that we're going to get from tariffs. You know, if we need to, quote unquote, pay for tax cuts in this reconciliation package, why aren't we talking about essentially swapping out income tax revenue from tariffs? That's what we had during America's golden age. The income tax didn't even exist.
You know, that's such a great point. I want to stay with that. David Malpass. They should put a plug in the budget baseline for a tariff revenue estimate. Okay, and the reciprocity idea may well work. It may take 5 years or 10 years, but these are 10-year scoring windows. That's point number one. They should have put a plug in for $1.5 trillion reduction from the Doge, Elon Musk's Doge. Okay, they should put a plug. They should do what Senator Crapo was telling him to do, David. You were, if my memory serves me, David Malpass, you were on the House Budget Committee staff many years ago, you and the great Adele Malpass. Yes, current policy, that's the baseline. The tax cuts should be scored as deficit neutral, that is the extended tax cuts. They don't need $4 or $5 trillion to cover it. They don't have to put the tax cuts together with spending cuts. Come on. They're not using all the tools at their disposal. That's what I'm saying. They should be smart. Put a plug in for revenues, put a plug in for Doge, get the right baseline in for deficit neutral tax cuts. Come on, let's do it.
That's right. Now, I wouldn't use the word plug, but I would use accurate scoring in order to figure out what the real goal is and what the options are for the economy. And the Senate does. I was on the staff, and Adele was the Senate Budget Committee as the first reconciliation bills were done, and the first tax bill, the Tax Reform Act of '86, was done. And what is critical is that the Budget Committee comes out of its technicality and allows the actual law to be changed, in this case, an extension of the tax cut. The market would really like that idea, but the senators, I think, are hidebound. They're still living in the past.
Yes, well, so it goes. Gentlemen, thank you very much, EJ Antoni and David Malpass.